Happy Monday, traders. It's 8:01 a.m. Chicago time on the 4th of February 2019. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. This morning, market seems a little bit sleepy. The European indices are off this morning by a little bit. The Euro stocks are down 57 basis points or 18 points. Crude oil is down 90 cents, 1.65%. It's really mixed. Well, it's not quite mixed. It's really red across the board, but not by much. The Russell's down just one tick, unchanged currently. The Dow Jones down 2 ticks. The S&P down half a point. The Bund is down 10 ticks. The Nasdaq's down 3.25 points. So you get the point. Really not much going on this morning. And looking at the overnight session, not much going on overnight either. The overnight session had very, very weak volume, very low volume today, behaving like it's a national holiday. So that's where we stand this morning in terms of sentiment. Looking at the calendar, pretty busy overnight. Had a bunch of European releases, Eurozone speakers, Eurozone PPI, as well as the Italian inflation rate and others. Looking at the U.S. session, we have the ISM New York index at 9:45 Eastern, the prior 65.4, and we're looking for factory orders at 10. And that's pretty much it for this afternoon. There's really not all that much to talk about. Fed's Mester speaking at 6:30 Central, 7:30 Eastern this evening. Expecting this to be a fairly quiet day, fairly choppy session. You can already tell by the overnight that it's a quiet one. So let's take a look at what we expected on Friday versus what we actually got in our review segment. Friday, the primary scenario was for a push to 27.15 that reverts back, pushes back down, and was aiming for 26.96. So 27.15 to 26.96. That's the primary scenario. The secondary is a push above 27.08, and then for the market to roll over and drop into 26.91, which did not happen. Here's what actually took place on Friday. We pushed to 27.16. Remember, 27.15 was a key area above, so we're looking for it to push into 27.16. And then 26.96 was the key area below. We pushed into 26.95.50. So this is plus 4 ticks from the expectation, well within the range though. Remember, we don't trade prices to the tick. We trade zones. Really, you got to look at the market as support, resistance, not levels, but zones. So it hit the top side, bottom side. We had a normal day, type where we extended the range just by a little bit to the downside. Took almost the entire session to get a range extension down, and we struggled with this 2700 century figure throughout the session. Early morning we pushed 26.99, pulled back to 2700 and a half, pulled back to 2701 and a half, and then we fell back through and then just continued to trade this big century figure in the area. Really, price and delta were moving in harmony on Friday. Pretty boring trade. Whoa. Pretty boring trade there. The overnight session since then, or the extended hours, Globex, we opened back up in a small gap down from 2704.75 to 26.99 and a quarter. We have immediately responsive in the Asian session. We continue to go sideways to the European Open right here. right here where we continue to just do nothing in the European session. Look at that profile on the overnight. Wow, that is some tight range. 11 and a quarter points relative to what we've been getting. And the volume is the lowest we've seen so far this year, I believe, without a holiday. So very little participation, no action here at all. Trading inside of the value area of Friday, inside of Friday's range, and holding steady. Not much to read off of this. I expect a pretty choppy open, pretty quiet trade. Looking at what we are likely to see today, moving on to the current expectations. Let's clean this up. So again, the gray areas are my predefined areas. Those are the big trade areas or structured trade areas. Very important that I outline those and have them up because they guide what I'm expecting. This morning we're opening up right against the point of control from Friday, right against Friday's close. The market is completely balanced this morning. Expecting a choppy open. Looking for a choppy open. I'm looking for the market to walk itself up and then test both sides. This could go to value high, but expecting the market to test both sides, hold steady, and I'm looking for a drift below this 2694.75 area. And if it does get below 2690, then we could be off to the races on this thin profile below. But I don't have that high of an expectation for today's range. We might see something like 2710 to 2694, 2690 on the extreme. That's 20 points. That's quite a bit given what the overnight range is telling us. That's the primary scenario. So it might extend down because it is balanced and it might go out of balance. But let's just say my expectations are not very high. I'm not expecting to comment very much at Convergent this morning in the Head Trader channel. Not really expecting to comment very much. Just keep an eye on your delta to see which side is loading up. Secondary, we drift down. We drift down into the overnight low. We struggle at 2,700. We push through. We poke below, and then we come back in, come right back into balance, and then extend to the other side and hold steady in here. Scenario 2 is looking for a second day of balancing. Remember, it's the Monday after non-farm payrolls. Monday after non-farm payrolls, traditionally a very low action day. Whatever was done on Friday. So, on the secondary scenario, so the important thing for me to see is, look, if it starts to push higher on the open, then I'm not thinking, oh, breakout, let's get long. I'm looking for, it's more likely that it would fail. We would have a failed push higher into resistance. So I'm looking for a market that is making a big effort to buy with no real progression in price. And I'm looking to short that back into the opening price. And for a scale out, I'm looking to hold for a test of the other side, for a test of 2698 or into 2700. That's how I would trade scenario 1. Scenario 2, if it immediately starts drifting down, then I'm gonna sit on my hands, let it drift down, and then once it gets close to 95.50 into 94.75, I'm going to look for it to see if there's any evidence of support. In other words, hitting the bid, but no price movement. That would give me an opportunity for a long. If it doesn't happen there, then I'm looking for that to happen around 26.90. That would give me an opportunity for a long back into price. So I'm trading from the outside in today more likely than not. Now, if we open up, we have an open test drive, or we open drive or something like that, then those plans are out of the window. I'm not going to fade a market that's showing open drive behavior. Okay, so don't. The goal with these scenarios is to keep a very pliable, open mind, and not to insist that the market do what my scenarios state. They're not. My scenarios are not dictating the action. The scenarios are just preparing in case the market reveals those ideas, and that way I can trade them. Okay, so that's all I have for you. I'm going to keep it short and sweet because there's nothing much to talk about. If you have not seen the AMA from last Thursday, it has been released. It's on my Twitter feed. It's also linked in the description of this YouTube stream. You can look for it there. You might pick up a few nuggets. It was focused on execution, and I answer very specific questions and look at a very specific setup that I look for. Try to detail that a little bit to help some folks out. Good luck today, and I'll catch you tomorrow.